Welcome to Sustainable Global Entrepreneurship. These are the instructions for quarter four. In quarter four, there are quite some new things, so I want to walk you through them. Let's start with the purpose of quarter four, which is making plans for the future. There's a really cool new feature, which is R&D. There's also a new option with regard to debt. Your system improvements can be large, but more important, it's the tactical plan. Quarter four is where you also plan ahead for the next steps, quarter five and quarter six. It also includes that you have an extended pro forma planning if you want. What's also new is the venture capital opportunity, and that's why you need to plan well ahead. So we're going to tell you a bit about this option. You have to collect another 2.5 million in investment, the business plan and how you build it, the presentation you have to help, and we check the learning points. So first I want you to remember where you are in the life cycle. We just had the introduction phase. In quarter one you could not sell yet, so you were setting up shop. Quarter two you tried your first product. In 3 you improved it, and now it's time to start speeding up this adoption rate. So there are new brand features you can actually develop yourself through R&D. Next quarters you can also trade in those and share them or buy other ones. It's time to expand and go global, so increase your sales outlet. If you don't go global in quarter four, make sure that you plan to do so in 5 or 6. Make sure your plant capacity is up to speed, because you will see in the line the growth will go fast now. So it will be bigger and bigger steps, so you need to be prepared. You want to push yourself into the growth phase and become successful. And you need this growth as well, because what you know is that over time you want to get into the blue, into the profit zone. And you need to get into the profit zone, as there's no way to get more funds. You don't have any money yourself to put in the company, and after this round no venture capitalist will show. So you want to get into the blue, make a profit, and the easiest way to do that is by selling more, so your fixed cost will be spread over more products. So you want to scale up and use the opportunity which is now out there. So let's look at the funding options. Actually, there are 2 in this quarter. So first of all, there's the bank loan. You can borrow money. Nothing wrong with borrowing money. There are some costs involved for interest, but if you use the money wisely and you can get a higher return, it's a very smart way to do so. Besides borrowing the money, you can also sell a part of your company to venture capitalists. There are 2 venture capitalists, and they're willing to invest up to 2.5 million in your company. But they do want a certain stake of your company in return. How much will be depending on your presentation and how good it is. So let's discuss first the first venture capitalist, which is from a community who's willing to invest, because your demand is up for your entire industry. We expect a lot, and it's a good moment to start investing in your company. You need money, the venture capitalist has it. So you need the money to address systematic improvements, to manage your stakeholders, to facilitate your growth, to develop new features, because you want to differentiate in this growth. And the growth will also enable you to reduce the unit cost and you to become profitable, which is interesting for the venture capitalist. So it's important that you have a plan ready, and you need to know your objectives, and they have to be clear. You have to have a strategy how to get there, which translate into tactics, which are your actual actions in operations and your decisions. So it's better to have a class A team with a class B plan than to have a class B team with a class A plan. Yes, make sure that you know what you're doing. So also it's important that you have looked back, but the venture capitalist is not only looking at numbers, it's also looking at how you present yourself. Yeah. So I'm not sure if you know a Dragon's Den style presentation, but it's a British TV show, also available in a US version and actually a Dutch version. Check that. You're gonna pitch to people who have money, and it's not only the idea, it's also, are you the team to bring it to a success? Having an idea is not enough. You have to have the right team, the right setup. So one difference to the TV show, if you wonder, there will be 1 or 2 dragons in your presentation, not that many. So you have to be careful, because if you have 5 and 4 are not interested, you have 1 left. If there's 1 and he's not interested, you have nothing. So the procedure, you will do your presentation, and the investor will quickly assess the risk of the investment and will decide how much he or she wants to invest and at what price. If you do really well, the first investor will be able to invest 2.5 million in your company, and at a certain share price. This will be between 70 and 120 approximately. It's also possible that the investor is willing to invest in you, but for a much lower amount. So what you want to have, want to have the most money at the highest share price. After you have been told how much investment you will get, which is after the presentation, and not all of you will get 2.5 million, you will get between 0 and 2.5. If you still need the money for your exploration, this is venture capitalist number 2. His name is Eddie, and he owns Fast Eddie Venture Capital Fund. You don't have to present for him, because he doesn't care. He is willing to make up the difference, up to 2.5 million, and he will offer you $10 less per share than the lowest price in your market. So it's not the best deal, but it's still, you have access to the money and become successful. So let's look at the presentation itself. You have 10 minutes. Approximately, you will be hard cut off at 12, and in that 10 minutes you want to tell who you are and what you need and what you're going to give in return, shares. Explain your current market position, but more important, why you are at that place. Show that you're knowledgeable, and then tell where you're going to spend this 2.5 million on in the next 3 quarters. Make sure it's a bulletproof plan and it is founded by numbers. Make sure you're all present and contribute, and after this 10 minutes you can expect a few questions. So also make sure that you have a plan B ready in the presentation if the investor will say, I want to invest less. So tell them if you want to use Fast Eddie or not. Tell them if you also are going to take a bank loan or not. The venture capitalist wants a plan. So the venture capitalist wants to know what you're going to do in the next 3 quarters. So you're going to convince the venture capitalist what it will take you to get ahead of the pack, or if you're already there, stay ahead. Make sure it is all aligned, and that your tactics are balanced. So make sure that you tell about the overall strategy, your segments, how you're going to do the marketing strategy and the sales, what you're going to do with HR, the manufacturing, and your expansion. Tell which R&D you're going to develop now, but also in the future. So the actual decisions which you're going to explain follow from the strategy. Let's see. So make sure you have some visuals ready for your presentation. You see now it says a PowerPoint. That's not necessary. It can be quite helpful, but make sure that you can have some visuals which make your presentation stronger, and the visuals can also maybe explain what you're going to do or show more. If you're going to use any visuals, they have to be sent to the venture capitalist prior to the meeting. So that is really important, that you can answer your questions directly, and if needed you have visuals. If you want to have some inspiration for visuals, there is a deck with very many slides for you available. It's a template. Remember that are many slides and you can't use them all because you only have a 10-minute presentation. So make choices. So this tactical plan, it follows from your strategy. So let's show you how this will be looked out. There is a way how you can map and coordinate all your decisions in the simulation. So in Q4, you can start investing in R&D, research and development. You can differentiate from the competition. However, it takes time, just like opening a factory. You make your choices based on what you think is right and of course your customer needs. So it might be other type of carbon or different tires, fenders, but remember they will only be ready the quarter after. So Q4 is expansion, it's increasing sales, but the big growth will of course come in 5 and 6 when you have the R&D ready. But start preparing. Think of your brands and your prices. But don't think if you invest in R&D in Q4 that you're ready in 5. In 5 you want to go into the next step, and in 6 and 7, so etc. So make sure that you have enough projected profits to pay for this R&D in 5 and 6, as there is no other way to get money than from revenues. So there are some templates also for the project revenue. You can all fill them in. This takes a bit of time. That's why you have longer this time. So start on time, figure all things out, and try to get to a plan. Based on the plan, if you can bring it in a convincing manner, you will raise the 2.5 million. So the procedure is pretty basic. Complete all your Q4 decisions like you did Q3. This is a bit more, takes a bit more discussion, but you can do that. Once you have done that, make sure that you put everything into the tactical plan in your pro forma statement and calculate if it makes sense. Also play with a few different scenarios, so a negative scenario and a more positive scenario. Once you have done that, also think about the presentation you're gonna give to the venture capitalist and what kind of visuals you want. You make all this and then you go to your business coach. The business coach will challenge you as the VP or as the senior executive on your decisions, and of course will coach you maybe a bit in your presentation. After the coaching session, you can update everything you want, and then you will go to your venture capitalist presentation. And the schedule is not presented by your coach as in the slide, but you can plan it yourself according to the instructions in the email. So this is how it looks like in a visual. Start working ahead just before the presentation, check everything with your coach, make some adjustments, and then you will go into the presentation, and after all presentations are held, you will get the outcome. If there are some changes in the outcome, like you got a bit less money or other choices, you can still, of course, adjust some of your decisions and then submit for the deadline. So in Q4, it's about manage the future. Yeah, take the initiative now by expending resources that will shape the events and the opportunities. One thing which is important for you to know is that in the simulation itself, the 2.5 million is already included. We expect you to collect all the money. So do not mistake and start spending the 2.5 million twice. It's already in there. Only if you get less money and you're not going too fast, Eddie, it will be adjusted. Yeah, so be aware the 2.5 million is already there. So for quarter four, first look back at quarter 2 and 3 and figure out the causes of performance shortfalls. So why are they not liking my brand, or why is someone else selling better? What's wrong with my ads? Or how can I make my ads even better? Also check your margin. How is it possible that I'm not making a profit with certain volumes? And figure out what volumes you need to become more profitable. Make sure that you have a plan where the money should be spent on next. You have the market development, you have the system improvements where you can also spend a lot on stakeholder initiatives and the community, but you also have R&D, and not to forget opening markets and making sure your factory is at the right size for your plan. So see how you can get more at your current investments. Can we become more efficient? What can we all do? When doing this, do not forget to look at your competitor. Your competitor also looks at you, so figure out what they are doing and learn from it. But also check what are your strengths and weaknesses, and how can you use the opportunities and avoid the threats in becoming more successful. If you're in a place where everyone is, only the strongest will be successful. So move to a place where not everyone is, as the market is big enough for you all to be successful. Differentiate with the R&D and find the position where you are comfortable in the growth phase. So do not forget to look at all aspects. That is the mental discipline of strategy. Check the business conditions, check your performance, and then re-engineer this all into the different tactics you have, and make sure that your objectives for manufacturing, sales, human resource, etc. all are aligned. It's not single issues, it's a connectivity. Only if you do all things right, you will boost to success. So make sure that with your team, you discuss all options and consequences. And then your corporate strategy will become a success. Quarter 5 and 6 are to expand your success and adjust a few things to make sure that you achieve a balanced progression towards quarter 6. So, but